And today I have some reminders because it is that time of year and it's taxes and everybody has to pay them if you've made kind of money. So we might as well talk about some help you maximize your tax time, maximize your deductions, and make sure that you are up to date on the things that sometimes get missed and should be remembered. So, the first thing I want to mention is that paying taxes isn't bad. In fact, if you have a business and your business was profitable, more than likely you're going to have to pay in taxes because you made money and you don't have the benefit of getting taxes withheld from your check and getting paid into the government. And so the government wants their money for Social Security, Medicare, which, fingers crosses around in 20 years, but regardless, it's something we have to pay now. So paying taxes is not bad. In fact, it's something that should be expected if you plan on having a profitable and successful business. And there's a lot of hoopla about people not paying taxes, but there are different things and a lot of misconceptions and misinformation regarding that. So you gotta dig in a little bit deeper. The biggest thing is not overpaying in taxes. Paying taxes isn't bad, overpaying taxes is bad. So just kind of keep those things preparing for taxes. And also planning for this next year. So tax planning, freeze taxes, which will get filed next year, is something that you can start doing today as well. So, reminder number one, that is paying taxes. Make sure you also have your business deductions. So, reminder number two, when we're talking about business deductions and what qualifies, this is a question that I get a lot. But the IRS code indicates that business deductions, business expenses are things that are ordinary and necessary to the operations and growth and management of your business, which puts it into a big cloud of interpretation, right? So, the biggest thing that I want to emphasize to you is when we're thinking about what I can deduct from my business, think about it from that lens. It has to be ordinary, it has to be necessary, it can't be extravagant or overused or in that great bounce things off of your accountant. Feel free to contact me if you have questions. But the biggest thing is you got to have a good argument as to why something is deductible for your business in order for it to typically be deductible. Was just on a podcast explaining this a lot, and I can drop the link in the chat or in the comments for this. So if you want to go back and hear a little bit more of a detailed description, you can feel free to listen to that podcast as well, or feel free to contact me directly, and we can talk more about that as well. But that's the biggest thing. One, make sure you're paying taxes is not good. Paying taxes is not bad. Making sure that you maximize your business deductions. Some of the deductions that often get missed are things like credit card fees or the processing fees. Those are things that get missed. Any kinds of insurance, if you did any kind of professional development, like taking courses or licenses, those are things that get missed as well. Travel, if you did any kind of travel that was business or partially business related, you can partially deduct that travel. So those are some things that a lot of times get missed. Another one is mileage. If you made any kind of trips related to your business, to Office Max, Office Depot, those are all things that can qualify as business mileage. You do have to have written down where you were going, what it was for, and the starting and the ending mileage uh speedometer things. So make sure you have that information in there. Those can coordinate to your calendar. So if you do have that information already in your calendar, you just need to have the start and ends of your speedometer. You can put that stuff in there as well, and that qualifies as documentation for mileage, for business mileage. Another thing that gets overlooked a lot of times is your home office use. So if you're a single member LLC or sole proprietor, you can deduct your home office space and all the expenses with that. And that usually decent deduction. So make sure you talk to your tax preparer about that as well. You don't want to miss out on those if you are working from home and you have a designated area for your business to be working in. Also, another big thing that can help lower your tax liability still is contributing to your IRA or your HSA. You actually have until April 15th to be able to do either of those things. So if you have a high deductible healthcare plan and you have an HSA, put some money in there. It's not like you're not going to use it. It's all tax free and it's something that rolls over year to year. So it's definitely a great benefit. And then retirement, if you don't already have something set up, something simple as like a simple IRA is a perfect way to start contributing to your retirement, even if it's a small amount, a couple times a year or once a year. Most IRAs have maxes on them, so just make sure that you're understanding that. But there are different levels of different IRAs that have bigger limits that you can deduct or contribute into as well. And then, also have that conversation. So one thing that does not affect your tax liability now is your Roth IRA. So if you're contributing to a Roth IRA, it's not going to help your taxes today, but when you pull that money out later, it's non-taxable. So definitely have that diversified. But those are some things that usually get missed with your 2022 tax liability. And then finally, like I mentioned, planning for today is really important as well. So if you end up with a tax bill that you weren't expecting and it was higher than it normally is, make sure you're reaching out. You can reach out to me. We specialize in tax planning that really digs deep into the tax code and how to leverage your business. But if you're working with a good accountant, they should be able to help with some of that tax planning as well. So what can you do to start proactively planning for this next year? Last year happened, it's already done, but staying compliant with 2023's taxes is really important. So if you do typically owe taxes and you haven't been paying in quarterly, that's a great way to stay compliant and lower your liability for this next year. So definitely some things to think about. Have some reminders. If you have questions, please reach out. Otherwise, have a wonderful day and a happy tax time.